Marilyn, I look at the bond market right now, and it's a jumble in fiscal stimulus in the United States. Is the fiscal stimulus in the United States a global phenomenon, or is it discrete to the United States?
So I think that the fiscal stimulus that we saw before certainly was a global phenomenon, and it certainly did help to promote growth globally, even though we did see these issues, obviously, with the pandemic and supply chain issues and global mobility really being restricted. I think going forward, when we do see the new package coming through, it will be largely very pertinent to the US, particularly when you look at the focus on infrastructure and on things that are very domestic to the US. That withstanding, I do think it was going to still have a significant impact globally as well. When you look at the demand that you might have for, for commodities from abroad, when you look at the demand for various things that will feed into the different packages, I do think it will have some impact globally. But this time around, I think it will be more pertinent to the US.
How big will the impact be on the bond market, Marilyn? 10's right now at 133.
Yeah, so the market, I think, is already pricing it in to a large degree. I think at the moment, when you look at the bond market, it really is very difficult to really understand why yields are still down at this level. And I heard, your previous speakers and you saying that, we do think the 10s will, rise further throughout this year. I think at the moment, the market is still digesting some negative news around COVID. And also, we're still continuing to see this huge amount of suppression coming from the central banks. As you do start to get more from the FOMC, as they do start to taper, start to withdraw this very, very, very accommodative monetary policy, I think that will help to shift yields higher. And then I also think that, you are seeing in the equity market, you're seeing in the bond market as well, already you're pricing in the stimulus that you're going to come through from the fiscal as well.
Are we starting to discriminate within credit, Marilyn, given what's happened with the Delta variant in this country? I'm thinking of the likes of Carnival and others in the credit market. Are we starting to discriminate a little bit more?
I think that's right. So obviously at the beginning of the pandemic, you did see quite a large amount of dispersion and discrimination between the different names. I think now, again, where you see that spreads are still incredibly tight, really across the board, across all sectors. When you look at the huge amount of crowding that we have in different asset classes and sectors of the bond market, because, again, the monetary policy stimulus is really pushing investors down the risk spectrum. Now, I think, is the time where we really are starting to see a lot more from a bottom-up perspective. And I think it's important, as you start to look where to invest in the bond market at these incredibly tight spreads and pretty rich valuations in general, then I think, it's really, really, really important that you really understand from a bottom-up perspective exactly the dynamics behind that company, behind the sector, and you really have a very, very high conviction in the bonds that you're buying. And I think we are starting to see that, and I think we'll see that further going forward, and it's incredibly important now.
Marilyn, a lot of people have said that the credit cycle is dead. What you are saying is that it is not, and that is why it is so important to do bottom-up research. What does this credit cycle look like, given where we are with Treasury yields and given where we are with the balance sheets of corporate America that are pretty good?
Yeah, they do look pretty good, and I think there are quite a few positives when you look at as you say, the balance sheets of some of these corporates. When you think that even when the Fed does start to reduce, its accommodative monetary policy, it's still going to be incredibly supportive for a very long time. And as the economy continues to do well, we're seeing this huge amount of demand. And you spoke earlier about, the demand-supply, imbalance that still will take some time to correct. I think we're going to continue to see a lot more demand going forward. And this is going to bode, I think, very well, particularly for those companies that have already been investing, that are going to be investing in, in technology, communications. They're going to be improving their supply chains. And I think that those companies will do well as we see growth continue to, carry on at this very, very robust pace that we're seeing.
All right, Marilyn, what's more important for an investor? Clipping coupons on a company that looks like it has a promising trajectory, even if that coupon is a lot lower, or searching for some sort of growth story at a time when the economy does seem to be expanding and when the consumer does have a lot of money to spend?
Well, I actually think that you need a balance of both. It's very hard at the moment you really have to do a lot of bottom-up research to find those companies where you are going to see the significant growth and you can really capture the price appreciation, so to speak. I also think it's important to find, in the bond market, areas of carry where you can get that steady income that you need. And it also depends on the investor. So we've seen, the huge continuing amount of demand even for treasuries, from pension funds that have very, very good funding statuses, from investors from abroad. You're continuing to see investors, corporate investors, investing in corporate bonds, even high yield, where they're looking for a little bit more carry to match their liabilities. So I think both are important, but I think really understanding the liquidity of those positions, understanding the risk-reward dynamic, understanding the potential volatility are all very important. And I actually think a very well-constructed, balanced portfolio is the most important thing now.